Welcome to Trading Lounge and the US stocks for the 1st of July. We're going to be covering Apple, Facebook and Amazon. So with Apple here, we're looking at, still looking for a top for wave 3 to come into play. So let's go in and have a closer look at this particular trend here. So in this instance here, we've got, well, from this wave 4 here, I can see that we've got an impulse wave to here, then a corrective wave here, another impulse wave here, and corrective wave here. Now I know this corrective wave overlaps this top here. That also occurs in some other stocks like Amazon as well. So we can either go 1, 2, 3, 4 and accept that overlap and look for wave 5 coming up into the 380 mark here, or we look for a more bullish picture, which would be 1 and 2, then 1 and 2 and 3. So a 1, 2, 1, 2 area through here, which would bring us up to the 400 at that point for that wave 3 there. So I'm not quite sure which one we should go for, which one is correct rather, but in terms of trading, then we want to be looking at the 380 there for that. I'll just go to the hourly chart here. So we do have trades on this. So we have a trade here, here, and here, and the stop was here last time we spoke. So we're going to move that stop up. I'll just leave it under here. I mean, one of the things that could occur here, I mean, we definitely got 3 waves here. So, and it's looking rather impulsive here. So that's a good thing. Sometimes wave 4s get a bit more complicated. So we get an A wave here, a B wave here, and then a C wave here, and then a move up from that point. So that's possible at that point. So do we leave the stop further away from that at that point? I don't know. I think it's good to sort of protect what we've got. We can always get back in as such. So I'll leave that up to you anyway. But that, just thinking about this position here at 6. So we're going to put it at, we'll put it at 352, I think. That's where we're going to put it. I'll just make adjustments for that on my spreadsheet. So from 342 to 352, that's where we're moving our stop to. Yeah, okay. I'll leave it at that. So our next stock, I'll just save that. Save that. And our next stock we can look at is Facebook. So we'll just go out to the bigger picture here for Facebook and we'll come back in here. So I'm tracking 2 counts for this, as you may know if you've been tuned in. So one of them creates the top here at the moment in terms of 1 and 2 and 3 and 4 and 5 here. The other one here has wave 1 down here, so that would leave a wave 3 up here for this. So yeah, still haven't had time to resolve that, but let's just move in and take a look at what we've got here for a moment. So this is the other count here. So first of all, we've got wave 3 here. I suppose we can count this up as 5 waves here. It doesn't count that well. So there's a couple of things. Well, first of all, we could put wave 4 here. That's what we could do, and have this as an A wave, a B wave, and a C wave here for wave 4, and then we just go straight up here for wave 5 of 3 up here. So that's possible. It's also possible that we've got wave 4 in here as an A wave, B wave, and C wave here, and have wave 5 sitting here as wave 3 here. So those 2 there, I need to spend some time to resolve those as well, but let's go in and take a closer look at this. So first of all, we had a trade in long here, and then we moved the stop up to get to break even here. So we don't have that in there anymore. So that's been flipped out. So we don't need those there, that distraction. And this is the way we had it counted. So we had a wave 3 here with an A and a B and a C here for wave 4. And then we could count this as 1 and 2 in here, and 3 here, and 4 here with 1 and 2 and 3 and 4 and 5 here. This could be the count here. The other point, as I just made, is having an A wave here, this B wave over here, and a C wave down here for wave 4 here. The other count too is that, let's just go back here for a second. Let's just double check a few things. So if it is that wave 2, we've got that wave 3 up there. So that is the 38.2% retracement level for that. So that's quite good. I just want to have a look at this again. Just going into the tick chart here, 100 ticks. So right, so that's from here we've got 1 and 2 and 3 and 4 and 5 to here. So that's 5 to here. Then we've got this one, which must be to that one. And that one to that one. So it does appear that we've got 5 waves in this particular structure. So that would leave us at risk in terms of moving back up here to the 61.8% here for this. Sorry, getting my act together. So that leaves us in this space here for that. That leaves us at 230 here. So the 230 is an interesting number because from 200 here to the 250 here, which is the medium level, and these are minor levels, so major, medium, and minor. And we know that if we get support on top of this level here, then we'll be going up higher from that point. It's also nice too that the 61.8% is here. So first of all, this could fail from here and pull down for wave C here. Not much further down, maybe just touch on the 2 here, because we know the 38.2% retracement here. So if we're looking at wave 4 sitting here, then this is how it would play out here. So it's good to look at all of this, and then we can just come up with a strategy. And the first thing that we need to do here is look for the long trade. So we know that's the 61.8%. We know that in terms of the trading levels, we know that if we get support on top of group 1, well, then we'll push up to the next level 5. So 1, 2, 3, 5, and 8, the Fibonacci numbers, and then we just use the power of 10. So 10, 20, 30, 100, 200, 300, that sort of thing. So what we're looking for here is a classic trading levels pattern. So in that regard, it would look like this here. If this was the 230 across here, we want to see the arrival, the reaction, the first high above the level. We don't want to be involved in any of that. We allow the market to correct across the level. We use that high to go long on. We use the second high to go long on. Or if we can get a better one, we'll go here. This is the pattern that we're looking at. If we don't see the market pull back below this level here, then let's get that variation on that. And then we'll use this one here. It doesn't make any difference because we still get this high and the second high here. It's just that either one of these can happen here. We just need to be aware of them, you know. So that's what we're looking for. So we'll just draw that in. I can't draw on this side of a tick chart. I can only draw on this side. So the arrival, the reaction here in 3 waves, the first high above the level, and then a corrective pattern here. And then if it's going to go up, well, then it's going to go up. If it's going to fail, then it's going to come back to the level here and then fail and move down from that point. So if you've got a keen eye, once you get 3 waves here, 1, 2, 3, anything below that becomes a short trade, and anything above here becomes a long trade, and you can also add to positions here. But when you're adding to positions here, as we've got 1, 2, and 3 here at minor levels, you can go down to sub levels and get another 3. So 30, 31, 32 and 33. If 33 becomes the support, then the next target is 35. So you can add on top of all these levels in here. So 1, 2, and 3 you can build in on, and 5 you can build in on. You could build in further, but you really want to get all your trades in at the beginning of the trend as such. So the move up through here looks like 1 and 2 and 3 and 4 and 5 here for 1 and 2 here. So it could be an A and a B and a C wave into this space here, but I have to say this is extending out quite nicely here. So there's probably a third wave coming in, so we'll probably go higher, but definitely wait for this to go long on through here if that's it, because we need to shake off this 5 waves here. This 5 waves, as I've mentioned, can be part of copy that, part of this wave 4 here. So we just need to be a little bit mindful of this. I'd rather talk about all the possibilities and then narrow it down, and the best way I can narrow it down is by going long here and setting the target at the 250 area through here. And if this is a B wave and comes down for a C wave here, well, then we know where we're at that particular point there. But this is a typical looking A wave here because it's sharp. You know, A waves are sharp and C waves are more lazy on an angle like that. So we just need to be mindful of all of this. So just to recap that a little bit here. So just maybe the 4-hour chart here. So it's possible that I can have this as wave 3 here, an A and a B and a C for wave 4, going up for wave 5, and we've got wave 3 here. If that's the case here, then we will take this here and we'll look at this as the A wave here and copy this a B and a C here for wave B and wave C here. And that would move over to here, that would be here, that would be sitting on this little level here. So there's different ways to count all of this here. So we could have this as an A and a B and a C wave here for wave 4, and we go up for wave 5, and that's cool. Or we have this, well, at least we know where it's going to fail from. It's going to fail from here and come down here in 5 waves, and we'll pick it up from this point and we'll move up from there. So I'm not sure about either of those, but I do know that if we get support on top of the 61.8%, which in this case is group 1, so we've got two positive things there, get support on that, we can trade and get that piece of the, we won't get all, but we can't run off with all the pie, but we can get a piece of the pie. Okay, so I'm going to move on to the next one, which is Amazon. So, I mean, first of all, I could count this up in 2 ways as well. I could also look, I've been counting it up as 1 and 2 and 3 and 4 and 5 and so on, but I could also put this up here as wave 3 up here as well. So I just want you to be aware of that there. There's different ways to count it. I mean, for us as traders, you know, sometimes you just don't know what the answer is until the market reveals itself at a certain point. But our job is go, okay, well, the stuff that we don't know, and we just really want to trade the stuff that we do know. So in this instance here, we've had a couple of trades in through here. We've taken a percentage off the top here, and we've been unfortunately stopped out here for this. That's okay. The next step we've got here is a little bit like the last stock we just looked at, because like with Facebook, we could count possibly 5 waves down here, and then we're looking for a B wave to go back up and a C wave to come down. So it's still possible here, but the good thing here is we've got 3 waves here, much the same as Apple as such. So it appears that we will move up higher through here. And if we're going to move up higher, this would be wave 1 and 2 here, and then be 3 here and 4 here and 5 here. So it's possible that we can come down through there, but I'll just remove that there. But this would give us that top there in this instance here for this. So I've also changed this around a little bit as well here. So in this count here, I know I can get 5 waves up into this point. I've called it wave 1 and 2 here. And I've also got overlapping wave structures here. Now I talked about that in one of those other stocks as well, with that 3 and 4, in the same vein as this. So this may not be correct here, but I would rather take the conservative view and work up, because I know that we'll get 5 waves from here up to the 2,800. Wherever I see an 8, we call it a profit taking number, and the bids will be hit there. Also, I understand too that if we get up to here, we really need to make a new high above here, because if we just get a double top, then I know double tops are not the end of the main trend coming up here. Okay, so but I just wanted to play. I'm aware of the overlap here between these two, so we'll just note that, and we're looking for 5 waves up through here. Now we could also view this here at 2.8, because that's the main level. We could view it as the arrival, the reaction here, and then looking for the first high above the level, and then an ABC here. This is what I'd sort of expect out of this level here. But normally when we're above the halfway mark, so halfway mark is 2,000 to 3,000, and then we've got support on 2.5 here. Normally when we get support here, it's pretty much we'll always get to the top up here. But if the market is going to fail and not get here, then it normally fails at the 2.8. So this is where we need to be careful here. So we'll look for a classic trading levels pattern here before we get back in. I'm not interested in chasing it up into that particular space there for this. So I'll just check what I've done on the tick chart, if I've updated it at all here. Just have a look. Nope. Have I done the 1 hour chart? Nope. But even so here, you can see that it's very clear that we've got that ABC pattern here. And I can also see that it's clear that I'll put the 2.8 in. There's also group 2 in here as well, but I won't go into that too much here. But in this instance here, we can see 1 and 2 here, and third wave, and there'll be supply coming in here for 4 and 5 to come in to finish that off in here. But let's just see how that goes. I don't want to go long this close to a level here that I know that we're going to get some type of correction across here. So that's what we'll just have to wait for, and hopefully we'll get that and get that and get this here, and then we can go long through these guys here for that. So let's just wait for that setup to play out, and I'll leave it at that. So thanks for tuning in, much appreciated. Cheers.